Real estate has been the talk of the town, and the southern market, especially taking into consideration what's happening with the IT sector, because the southern market, especially Bangalore, IT sector accounts for nearly 60% of the real estate sales. Welcome to KYC. Today we're going to talk about Brigade Enterprises. I'm Hiral Dadia, and with me is Anushi Vakharia, and a happy Dasera to all the viewers as well. First up, why are we talking to a Brigade Enterprises? Now, this is because it's coming in at a time where they're signing GDVs in the city of Bangalore. And what is that impact of the macro headwinds of the IT business going to be on their business? That's the first question that we ask the management. This other things that we want to know from them is the guidance that the company has given, which is around 15 to 20% in terms of the pre-sales growth in FY26. Will that be met, taking all of these hindrances into consideration? And the downside risks that you're talking about in FY26, if the guidance will not be met, if there are any risks that the management will be looking at.
Well, Hiral, real estate, residential has always been the focus, but let's also understand what's the kind of leasing trends that we are seeing in the commercial business, because that's one area that the company is also expanding strongly on. So that is another area that we are focusing on. Other than that, a plan for a potential REIT is something that we should be watching out for to monetize its commercial portfolio. So commercial is also the play that we are watching out for Brigade Enterprises. Apart from that, what we should be also seeing is how the new launches, collection growth, and the new geographic forays are also going for the business. Now, Bangalore is the stronger market, but the company is also expanding its presence in other markets like Hyderabad as well. So that also remains as a key question.
Absolutely. Now let's understand all about the company. Brigade Enterprises, they are developers who've been established since 1986. They've actually constructed more than 300 plus buildings and 100 plus million square feet of space that has been delivered. In terms of the business segments as well, they are into multiple segments over here. We're talking about residential, commercial, hospitality and retail. Commercial is something which is really picking up in a strong way, Anushi, for the company.
Absolutely. In fact, if you look at about hospitality also, they just came out with an IPO a few months back. So that is another area of focus. But let's talk about the project pipeline, which is there. 26 million square feet is kind of the ongoing projects that are on the cards for Brigade Enterprises. This also includes about 16 million of upcoming launches as well. And the main key land bank, if you look at that, adds to about 587 acres of land bank, with Bangalore having about 3/4 of it, about 363 acres is from Bangalore that we are seeing. The next other destinations which are in focus includes the likes of Chennai, Hyderabad, Kochi as well. So, these are particular areas wherein we are seeing Brigade Enterprises focusing on more.
Right. Now, let's move on to the project area, which is the product mix that we're talking about. Between residential, commercial, hospitality, and the mixed development, 75% of the revenue is coming from residential. Commercial is 18%. Probably that is something that could pick up, but taking the headwinds into consideration when you talk about IT as a sector, whether that will expand or not at this current juncture is what we have to see. Hospitality and mixed development is in that range of almost around 4% and 3%, so less than 10% exposure to both these aspects. So that's what the project area and the product mix is looking like. But let's shift focus in terms of the rating parameters that we're going to talk about today. First up, the income statement check is what we will do. Balance sheet, cash flow, return ratios, the shareholding pattern, street credentials, valuation picture, and the street coverage along with the outlook is what NDTV Profit will be dissecting on KYC for a Brigade Enterprises. But first up, let's look at the income statement. Now, it's very interesting to see the kind of, numbers that the company has posted and the kind of growth that they've seen in the key operational matrix as well. Let's start with the pre-sales number. You're talking about 4,100 odd crores, which did come in FY23. From there, it's nearly doubled to around 4,850 odd crores in FY25. So the pre-sales number is very strong. If you talk about growth, slight moderation in FY26 as compared to the previous 2 years. And if you talk about the first quarter, that is also slightly lower. Collections also have been very strong. The trajectory has been upwards. And if you talk about the overall growth in the collections aspect as well. It was down in FY24, but again, it started to pick up in FY25, where we've seen a growth of around 23% that has come in there. If you talk about the operational trends as well, now in overall, your realizations have been flat in the first year, which is FY23. But a 40% growth on realizations is what the company has seen in FY25. So that is very positive from a realizations aspect. Moving on, if you talk about the other matrix, from the net area sales to your net sales, your net area sales actually on a sequential basis did see a degrowth of 17%. Net sales was absolutely kind of flat. Realizations saw good growth. In fact, the management has been very confident to maintain their average realization trend as well. And collection was decent at around 8%. Overall, if you talk about the income statement from FY24-25 and the 3-year CAGR, a 20 to 26% CAGR on revenue and EBITDA is pretty good. Margins, I mean, you know, you don't really want to look at it, but 26-30 to 30% is the kind of range that you're looking at. So overall, the numbers are very strong in terms of past data. It was mainly the first quarter which did show a blip, and usually the trend is that the first quarter for a real estate company does come out to be slightly weak, and hence a thumbs up.
Right, you know, it's the second half which is in focus in terms of how the upcoming launches are going to shape up for the business. And even in terms of income statement for most of these real estate companies, if you're looking at it, it's a longer term picture that you need to have in mind, considering the lumpiness of the business and recognizing their revenue, since the real estate businesses project their revenue in terms of percentage completion or project completion method. So do keep that on your mind as well. But moving to the second metric, balance sheet is something that you should be seeing. Now, if you are looking at the book value, now that has seen a significant uptick in terms of whether FY25 numbers are concerned. 5,638 crore is the kind of value that we are looking at, while borrowings in the last 2 fiscals have remained in the similar lines of around 5,000 crore or so. Cash in bank, a significant uptick in FY25 is what we are seeing in comparison with borrowing. That provides comfortable levels for the business going forward as well. Even the debt to equity levels, if we are seeing, has more or less remained under the company's guidance level that they have given so far. So we've given this one a thumbs up as well. But Hiral, cash flows.
Interesting numbers when you talk about where the cash flows go. Now, if you have to look at the cash flow from operations, clearly from a 966 crores, it's remained stable at 995 crores. There was a blip in FY24, but it's come up. EBITDA has seen a steady growth, and that is what is a positive. On the back of which, if you see in terms of the net cash flows, from a 1 crore number in FY23, it's actually gone to 4 digits, 1,265 odd crores. So that positioning with regards to the net cash flow is concerned is very positive, and that's the reason why we give it a thumbs up here.
Okay, now coming to the fourth metric is return ratios that we are looking at. Return on equity and ROC, if we see significant improvement in terms of, you know, where the numbers were from FY22 to FY25, from what was a 4% of a mark from in FY22 in with both of these ratios that we are looking at. We've seen this moving to double digit for ROE in FY25. 13% is the kind of mark that we are looking at, while for ROC, we are seeing this at 9% in comparison with FY22. From 24-25 also we've seen similar levels, not much of an uptick over here, but this is something that we should continue to keep a track of. So hence, for now, we have given this one a neutral rating, if considering that this does see above 15% of a weightage or so, is something that we should be watching out for Brigade Enterprises. But shareholding pattern next.
Okay, so that's with regards to where the shareholding pattern goes. Now let's look at, you know, the promoters. Now promoters have slightly gone down. The public shareholding has gone down, but it's the FIs which have actually increased stake. Your DIIs have also seen a marginal blip, but on the back of that FI increase, which is nearly around 5 to 6% uptick that has come in, it's a thumbs up there, because everything else has kind of remained pretty stable.
While for street cred, if you are looking at, you know, after the shareholding, it's not done so well in terms of how the 1 year stock performance is concerned. In fact, we've seen correction of more than 37% or so in just this 1 year period. Even in the last 6 months, 1 month, if you take the investor performance in consideration, about 4 to 7% is the kind of downtick that we are looking at. Now, this is against the 5 year performance, wherein the stock has seen about a 5 times of growth. But, you know, in terms of what's happening with the real estate sector. Last year also FY25, there were approval challenges, there were regulatory issues, launch pipelines slowing down is something that has weighed in investors' mind is also that is something that we are seeing. So in terms of stock performance, we have given this a thumbs down. But coming to the analyst recommendation, here is a positive view that we are looking at, right, Hiral? Considering that there are about 13 buy calls in this particular counter, while 0 hold and 1 sell rating now, which brings the overall return potential to about 45%. So despite the kind of correction that we've seen for this particular stock, analysts continue to remain bullish and are seeing a 45% of an uptick. So a thumbs up is something that we've given for this one.
And that's really encouraging, right? 13 buys, 45% upside from the current market price, and that probably tells you the story of what analysts are waiting out for. So let's look at the outlook from here on. A pretty neutral one, because if you're talking about FY26, the management is actually targeting a double-digit pre-sales growth. Yes, there could be hiccups that could be coming in the second part of the year or from the third quarter onwards as well. And if that happens, the guidance that they've given for pre-sales could be delayed. That's the concerning area that we should watch out for. Realizations are expected to stay at around 10,000 rupees per square feet. So that will be a slight downtick from the previous year if you have to actually look at what they got in FY25. In terms of upcoming launches, 13 million square feet is what they're planning to launch in the next 4 quarters. They have multiple projects in Bangalore, Chennai, Hyderabad and Mysore. And if you're talking about their capex plan, capex balance of 800 odd crores is what they're sitting on as of June 2025. So pretty neutral outlook is what we're looking at right now, and hence a neutral rating. So let's quickly look at the final performance. If you have to rate the company on 8, 3 parameters which are a thumbs up over here. Your return ratios is neutral. On the other side, if you have to look at shareholding valuations, again, it's a thumbs up. It's the street credentials, which is a down, and the coverage and outlook is neutral, which comes up to a 6 on 8, which is a very good rating, on a KYC for a Brigade Enterprises so far. But on the back of this, let's welcome in the management as well, who will be talking to us, what is in store from here on. We have Mr. Jaishankar, who joins in. Welcome to the show, Mr. Jaishankar. Always a pleasure. Who is the executive chairman at Brigade Group. First up, you've signed 2, joint development agreements in Bangalore. This is worth nearly 3,600 odd crores. What are the kind of timelines and other details that you have for us?
See, the first one is in Banashankari, Bangalore South, is in a very prime residential area. So where we intend building about 1 million square feet of residential space, somewhere in the range of anywhere between 12 to 13,000 or even more per square foot. And it should, right now, it should happen in FY27. FY27 it should happen. The other one is another joint development for about 10.5 acres in Bangalore East, which is again a prime area sought after by IT professionals. There we will be building up to 2.5 to 2.7 million square feet. So which will also have a GDV of 2,500 crores and upwards.
So Jaishankar, also want to understand, the timing is interesting across the top cities. Now, Bangalore is one of the key cities which has seen highest dips in terms of whether units sold are there in H1. In Q1, you also recorded about a 17% dip. What is leading to this? Just want to understand that.
It is a combination of 2-3 reasons, I would say. A lot was to do with project launches, not just for Brigade, for across the sector. There was substantial delay in launch of new projects based on approvals due to a variety of reasons, change of government and the restructuring of Bangalore Brihat Mahanagara Palike, what is equivalent to BMC, and now it has been divided into 5 corporations under a new name called Greater Bangalore Authority. So with the result, there has been a disruption in approval status, and at the same time, FY25 saw a very good growth in real estate. in FY26, there is, I think it is more of stability than for further growth. Primarily because the geopolitical situation is not that great, particularly the last 7-8 months after the change of government in change of president in United States. There is a lot of uncertainty, disruption, yeah, a change of policies. With all that had some uncertainty and a bit of negativity.
Okay, so taking this aspect into consideration, is is the headwind behind us? Because you're talking about headwinds that are coming in from IT companies as well, with the various macro issues they're facing. How are you looking at that aspect, and are you seeing concerns, or is there resilience?
No, it is certainly resilient, but probably clients may take a little bit longer for decision making. There is the situation is, as you rightly mentioned, it is a bit fluid, but there are various schools of thought on the impact of H1B, policy changes or visa policy changes. So some people feel it can ultimately have a positive impact on Bangalore. In fact, every time there is a global crisis, the IT sector in India has always been the beneficiary. Whether it is a Y2K, whether it is a global financial crisis, or subsequently also the global capability centers, what is generally referred to as the GCCs. There are more of them are entering India and Bangalore in particular. And as far as AI is concerned, I think there is some amount of disruption can be expected. At the same time, the low cost work has like call centers, etc., have almost disappeared from Bangalore and many parts of India. It is the shared services which are still there, but they are also more in the nature of GCCs in a lot of cases. So I don't expect, because of availability of huge talent, and also they're so well established here, it is impossible to think of any major impact.
Okay, management also targets a 15 to 20% of a pre-sales growth. Now, do you plan to sustain the sales guidance? Along with that, how realizations are expected to be?
So I think all I can say at this point is our team is working hard. If some projects are launched as expected, if all the projects are launched as expected, we should reach. But if there is some delay, I think it can get into Q1 of next year. But the pricing should be fine. Pricing realization should be fine.
Everything should be fine. But if there are any risks, what should be the downside one should look at?
Yeah. As I said, the team is always working hard. By and large, as a matter of policy, we don't give forward-looking statements, but that is the intention, I can say.
Jaishankar, can you also elaborate on your land bank strategy? Now, what are the key areas of new acquisitions, and what is the target gross development value that you have in mind?
See, we have recently added about GDV of about 10,000 crores in the last 6 to 8 months, and we will be adding another GDV somewhat in the similar size in the next 6 to 9 months is what I expect. So we would like to, I would say, have this growth of 20 to 25% ideally.
Moving on, if you have to look at the leasing and the co-working space as well, this is something which is really picking up. How is the demand looking like, for a Brigade Enterprises?
See, our co-working business is quite small, nothing much to talk about now, but it is growing year on year. and maybe in 3 to 4 years time it will reach some considerable size. And we have currently about 10 million square feet of annuity income yielding assets, where we are finalized properties, and in the process of approval, we intend adding another 8 to 10 million square feet of annuity assets before 2030.
Also, I want to understand, your strategy for exploring a potential REIT, and this is to monetize a commercial portfolio. I want to understand on that.
So as I mentioned a few minutes back, I think only when we reach about 20 million square feet of area, if not more, we will explore that. And at least in the next 4 years or so, we don't have immediate plans of, going for a REIT.
Okay. Any new geographic forays that you're looking at? Because we're seeing a lot of new entrants that are coming in the MMR region. What is your strategy going to be with regards to geographical expansion from here on?
So currently we are in the 3 metropolitan cities of Bangalore, Chennai, Hyderabad, and 2 to 3 tier 2 cities in Kochi, Mysore, Gift City, and bit of Trivandrum we are entering. So we would like to currently focus on these cities, and I'm sure and I hope the opportunities in MMR and NCR will always be there.
Okay, your pre-sales growth of 3% is lower than the overall guidance of double-digit for FY26. More launches are they expected in the second half? Key launches planned, if you can help us with that.
We are expecting about, I would say, about nearly 5.5 to 6 billion square feet of new launches, of which in Hyderabad, we are launching the second phase of, Brigade Gateway, Hyderabad mixed-use development. That should happen by Diwali or so. And we are also expecting, one large project, what I talked about earlier in Bangalore East, and also another large project of a high-end project in Chennai. These are the 3 larger size projects, which will have a, I would say GDV, gross development value of maybe nearly 3.5 to 4,000 crores. 4,000 crores.
Mr. Jaishankar, my last question coming to you is with collection growth. What is expected going forward? Any guidance for FY26?
I don't have the full ready figure, but collections are on track. There is no, reduction in the collections projected earlier.
Okay. Thank you so much, Mr. Jaishankar, for joining us on Know Your Company, a company that is rated almost 6 on 8, which is a very strong rating on the back of the performance. But very quickly, Anushi, the top takeaways from this conversation.
Well, while the management did say FY25 was marked with uncertainties related approval challenges, FY26 is expected to be stable. Now, if all the launches are launched, we should see, the company maintaining a double-digit growth guidance, or there might be some spillover in the first quarter that we are looking at. A 20 to 25% of growth in GDP is something also that we should be watching out for.
I think lots to watch out for, but completely out of time. That's all, folks. Thanks for tuning in to KYC only on NDTV Profit for your profit. Lots more lined up on the other side. Please stay tuned.